Everybody smash that like button while we're chilling here waiting. Let's get ready to get started. All right, we are probably one day away from getting DD bands automated for those of you in the Pro Plus package. Make sure you get that set up and get your futures data set up. That way you can get that tunneling through. That's going to come through. And as soon as that is automated, we're getting rid of the DD band spot. No more bot. So DD bands will be a perk of Pro Plus only. Make it super simple. All right. Everybody, we did some exercises yesterday talking about how to do impact and run length red lines. So we're going to do these on here on the NASDAQ. I remember we did an example on that. Actually, let me just double check what those were. Deleting those guys. We are opening inside DD bands today. We have, again, NASDAQ has touched the upper band. It's one of those days where the market's just going to probably already fulfill what it wanted to do. Probably not a lot of movement till NVIDIA earnings. I know that's going to probably kick the market going somewhere up or down. It's going to be basically internal, I think, to this move that we've seen today, and then it's going to move on earnings at the end of the session. So same thing here. The S&P is opening inside DD bands. Russell's opening inside DD bands. Market's going to be somewhat stable, but we already did touch, so it's a yellow light for the rest of the day, which means trading half the size it normally would. Now VIX again in decay, which is great. We are seeing that pullback, and that VIX is kind of getting to a level of, stability at least. It's one of the things you do want to see going into, a new month after we did have a kind of a volatile month. All right, we'll take a quick look at the monthly maps. Now, what's neat to see is that coming back into yesterday, we did have a monthly maps return to bull side. Now, the way that you look at this is you look at the bottom of the bull side. Clicking monthly map right here on your Rocket Skater platform will show this to you. You can see the bottom of the bull zone is getting deeper, and it's like a deeper pocket. So this is where we're trading right now. And as you see, as time goes by through September expiration, bulls are digging in stronger, which is neat to see. And then the other side of the coin is the bear side, which is the top of this light gray. The bear side is particularly getting weaker going through September. So again, this is spelling out a potential move back to here to finish out the month of September. So I'm excited to see this take place. So the positioning is really good. What's up, Ali? Good morning, buddy. How you been? PMI in 18 minutes, yeah. Honestly, the way that I think is that the market's probably going to shoot up pretty high on NVIDIA earnings and then probably try to attempt to sell off again. I think a lot of bears are waiting for a big high to pop off to sell. So I think that the market, if we do move up for the course of the month, it's here. It's gonna fight its way out. Now it's hard to know if we're gonna beat this or not. It's going to take some kind of catalyst to break through that and go. I don't think we get that just yet. I really do think that right now my brain is telling me that between now and September, we're not getting any higher than that. We're not filling that gap. So that this trading month, we're basically inside of here. Best case scenario to the upside. Worst case scenario to the downside, I don't really see us breaking this 420 I think that finding another leg lower, it doesn't look feasible right now. So I really do think this is a temp bottom that we're setting up, and that we'll end up somewhere inside of here over the course of the month. Now that's exactly how I'm thinking about it. I don't know, Ali, what do you think? You had some pretty good targets, by the way. You nailed that low last week. I think September is a relaxing, non-volatile month. No volatility clearly in between the zones. You can see that the VIX is in decay, so that's a pretty decent sign. And of course, so essentially no volatility means, the V's get smaller, right? It's consolidation type event, month. And I'm still battling a cold. Like I said, I had a cold before I went to my brother's 40th surprise birthday party. It was so much fun. I'll tell you guys all about it when we get started. Market opens in 1 minute. But I'll tell you guys the story since we go. So everybody, in the meantime, smash that like button. Get ready to get started here. All right, resilience out the door, 67%. Okay, let's talk about resilience. The first thing that you know is resilience greater than 0. Support at half gap is the trade to go. If you support above here, then it trades to next resistance. Wait for those liquidity maps to come through. We'll get some numbers there. And I still showed up. All right, liquidity maps. Let's go. These come through yet. All right, let's do it. Okay, SPY. QQ bear short up. Okay, that's still downward pressure from hedge pressure. Bear short up on QQQ. Okay, let's do Qs first. That's the most important one today. Now remember, yellow light because we did hit upper DD band. Bear short up is that resistance from here, but of course the positive resilience pushes up here. Any hedge pressure break is going to go into liquidity pocket, so I look for that going up in here. Actually, let me just pardon me. The more likely scenario is that there is a rejection from here. So essentially, you know, there could be a break on there and a hedge pressure break. Now again, positive resilience. It's one of those things. There's competing signals today. Resilience is obviously going to supersede my thought process here. Resilience from here to here is the only easy to predict path. Any break of hedge pressure can go to liquidity pocket. I need to stop resizing this. From here to here, market is random from there. DD rolls. Now again, we'll talk about SPY in a second, but open in bear zone, typically close in bear zone. So that's a potential pathway today. As long as resilience stays above 0, we're going to be above half gap today. So this is basically today's range. That is what I said pre-market. Probably a pretty easy to see consolidating range going into NVIDIA's earnings today, which is going to be after market. If you guys are just new to Rocket Scooter, we get quick on this. Trust me, go through the boot camp. You'll get really fast like I am at this and read the market just like it is. All right. So bull long up today, or sorry, bull short up today that is pressing into being a bull long up. Let me go ahead and take monthly hedge pressure off since it's resizing. Okay. So let's open up our cheat sheets. And those of you that are new to Rocket Scooter, hang with us today. Just kind of learn the very first day, kind of watch it. Okay. So DD ratio is bullish. DD ratio is very bullish still, 95%. So opening in bull zone ends up being support. Okay, so there's like a hook shape there, and so we're going to draw all the places in the S&P. So this is the DD support, right? DD is bullish. Resilience is greater than 0, so the resilience is support there, right? Outside of the band, resilience greater than 0, there's push to there. Any break of here goes to next resistance, which is DD band, which is about 440 and some change. So today's trade is pushed to there, and if one were to hold a runner, it's to there. Strong resistance at 439 today. Easy to see that. Okay, cool. EVXY. I didn't take any trades. I'm not taking this one right now. I'm in the middle of like 5 different things. We're getting DD bands automated, so that's going to be pushed live probably tonight. UVXY in no danger zones right now. So VIX is nice and clean to the downside. This is golden setup day, you guys. So that everything's looking pretty clean. If VIX touches the bottom of a bull zone, clearly we're going to have possible volatility introduced into the day. But overall, things are looking pretty solid. BSU is also bullish support from bull zone, as you see right here. So even Russell pulling back, keep an eye on this 183 level on Russell. If we lose that, can catalyze some downside, but overall today is going to be green. I can see that from a mile away. It's going to be pretty good. Now remember, Jackson holes on Thursday, so Powell speaks on Friday. All right, so I do like the market today. Nice clean update today. Does everybody see that? All right, let's take a look at NVIDIA because I know we have NVIDIA earnings today as well. Clear your browser. Oh, SPY not coming for you. Logged out. Anyone else? It should be coming through, Barb. Let me see. Yeah, close everything down, open it back up, try a different browser. Those are some things that you can try checking on. And letting you guys know, one of the things we're going to do as soon as all the DD bands and everything that we're making with futures is automated, we're going to end up taking some time and optimizing the platform. One of the biggest projects we're going to do is going to be like a 2-month optimization journey. So we're going to go through, optimize it for every browser, for speed, for memory use, everything. So it's kind of like when Dorothy and her friends went to the Emerald Tower Palace, whatever it was, in Wizard of Oz, and they give the fucking Tin Man a shine and they trim the lion's hair. We're going to come through like we're visiting Oz, and platform's going to get a nice spit shine, make it look more good. 9:45 a.m. flash manufacturing PMI. Yeah, we got to pay attention to those numbers coming through. So essentially today's a slightly update. Going to trade up a little bit. I do like what I see. PMI is coming through about 7 minutes, so keep your eyeballs on that. The global U.S. services right here is a 3-star, and new home sales coming in. Again, with the interest rates being so high, right, those mortgage rates, ridiculous. And so kind of keep your eyeball on what new home sales are. Right? That's kind of hinting at the idea that credit and lending could be slowing down, bad for the financial sector, et cetera. With interest rates being so high, people aren't necessarily running in and getting houses as quickly as they would be. Even my own thoughts on, buying a house is like, well, we gotta wait for the interest rates to come down. Give me 1 second, you guys. All right, friends. All right, taking a look at NVIDIA today. Obviously, NVIDIA just kind of pulling back a little bit. We have earnings after market today. Keep an eye out. We have 5 minutes, some data coming through that's going to move the market. So let's just keep an eyeball on what. Let me look at the hourly chart. NVIDIA is going to go back and see kind of what's been trading last couple of days. Remember optimizing your old crypto scanner had WebSockets all over the place? Oh, nice. Yeah, I mean, most of our technology is based, all of our technology is based on a core principle of all the calculations we do are done server side and broadcast with an open connection stream to you on the front end. So a lot of the platform optimization is going to be on that, right? Or the server optimization is going to be on that. Database optimizations to prepare for future projects. And then of course, front end is not doing a lot of calculations. It's just doing a lot of display. So one of the things is that like the live scanner updating as much as it does, things like that are definitely memory hogs. So we're going to start working on a lot of that, the front end use. So what's neat about, you know, our technology is that we broadcast all of this to you. Some of it's done locally, but the hedge pressure is never calculated server side. Which you can contribute to Rocket Scooter's idea for leaders form of inverse resilience for other sector. I mean, honestly, ideas we would love to, if you come up with a good idea, we'll throw it on the platform. Yeah, like the idea that you can create some kind of relationship model like that. Or even not just build a specific indicator, but build an indicator that can make an indicator. Like an example, a resilience kernel, where you can go in there and say, here's my basket, make a resilience out of it, right? So the idea is, okay, here's my basket. Let me add all the stocks in financial sector. Okay, let me make a resilience out of XLF. You can go, let me make a resilience out of FANGs. And you can actually build that aggregate model off of whatever, and you can choose to market cap weight and non-market cap weight, etc. Be fun to do. And of course, you know, we are looking to expand this year. Like I said, we're going through some stuff right now where we're trying to see like how we're going to pivot. We have 10 projects, I swear, that I'd love to all get kicked off right now at the same time. I'm on a journey to hire 8 to 10 more people by the end of this year. The only thing is budgeting. So we hire as fast as we expand. So currently we're hiring 2 new people this week. We just hired 1 person last Friday. The next person's about to get hired sometime soon. And then, of course, we're going to pull 2 more developers on our team probably by next month. And hopefully 4 more developers by the end of the year. We can carry all these projects forward. So we'll put out a call for resumes. We're up to, our company has 23 people on payroll. We were 22. We'll be 24 by tomorrow. I'm always looking for smart, intellectual people. Engineers, don't matter what you do. But mechanical engineers, nothing you can do for the platform with a mechanical engineering degree. Just like my chemical engineering degree doesn't help me here. But as a critical thinker, you're good at pretty much anything you do. Isn't that right, Edward? Engineers are just great at doing anything. You learn how to problem solve. So you could put you in an environment, doesn't matter what it is, you'll figure out a way to do it even if it's not the best. I put you in a kitchen, a bunch of ingredients, you'll figure out how to make something. Or cook it, or whatever. Engineers are great at solving problems. That's why I like working with them. And engineers are very versatile. They can solve pretty much any kind of problem good enough. Which is kind of the best thing about engineering is like, you're mathematically trained, but you're kind of solving something with a good enough approach. It's a speed versus return on your investment model. You don't need to get exact in your calculation. You just need to get good enough to where it's quick enough to be efficient and do the job and then move on and get on. It's like a art mixed with science. So I love engineers. We're the best. Put you in the game, coach. Hey man, I'll ask for resumes. Now, we're all about outside the box thinking, creativity. Very like Google mindset here. Everybody that works for our team has pretty much equal say to me. I don't run my company with like overriding veto power. I don't make people say, you know, Matt has to prove this massive. Literally, I hire the people who I know are great at what they do, and I let them run with it. It's always been something I prided myself on. Is the best decision you can make as a CEO is to hire somebody that's smarter than you at every single part of your company and have them teach you how to do what they do while you lead them and inspire them to do it. So I like to hire people that I like to sit around and listen to them talk. And when we have our meetings, our marketing meetings, our board meetings, everybody I sit with is just so brilliant in this company. They have such cool ideas, innovative, and I just let them run with it. And I like that. So As long as you're that kind of personality, you fit right in. And for somebody that needs to be given direction, that needs to be led, that needs to be given projects and told what to do, it won't work out. So it's a startup mentality. I want people to see a need, come up with a clever way to do it, and then sell the idea to me and say, like, this is what we need. We need to do this. I'm okay. That's how we are here. Which is great because the innovative spirit is still the way that it is. We're not being so corporate about everything. It's still got that cool startup feel to it. Everybody's adding their final touches. Like one of my developers is like, hey, I'm going to put a new face on the platform. Just trust me. I was like, all right, I trust you. And then he, a month later, has been sending me bills for it. I'm not like, hey, can you give me, updates? Can you show me what it is? I'm like, I trust you. Show me the final design. That's what I told him. And he goes, okay. And he sends me the final design. There was very few things I wanted to change. He just gets the project. It's his baby. He took it over. And look at the new platform face, right? Look how cool that looks. He's like, I'm going to redesign the platform and make it optimized for all these different things. And he wrote me this thing that told me all about it. And I was like, bro, that's great. Let's go with it. So there's like a lot of things. It's laid out a little bit more friendly. This is the older version of it, but he changed a few things. But like the idea is that, yeah, we'd love to have people on the team that are able to just see the vision and just run with it. So I'll put out a thing for resumes for sure. What's up, Alan? Amen. Lots of no engineers are annoying to your family. Yeah, I'm sure pretty fucking annoying. I know I can be. You have no JS experience. Oh, it's perfect, man. JS experience. The one limitation would be salary. We might not be able to afford you. So, not yet. A lot of times, developers can be very expensive, and somebody with a lot of experience may want like salary and benefits and stuff. And we're getting there. We're getting there. We get paid, but $200 an hour paycheck for sure. I'd say Rocket Scooter makes sense to you. Their system is easy to follow. Oh, hell yeah. But essentially this year we want to hire a core US development team and a server team and a infrastructure and security team. So these people will be very important for the future division of Rocket Scooter, the AI and machine learning portion of what we're going to build. And we need some US programmers. Majority of our programmers right now, we have a couple contractors in the US. We have some people in London, some people in India. So our global development team is all over. So we have people working around the clock. Done your boot camp already? Love it, dude. Thanks, City. I'm glad you're enjoying what we do here, man. In any way, like we can use leaders and community leaders and all kind of stuff just in general before, if you guys want to get seated in the company, y'all are all welcome to pick up a shovel and start digging holes. I mean, we got tons of stuff that can be done. Look at SPY, please. All right, Kat, you got your BLU to DD band. That's what we're looking for. DD band is right about 4431, which is about 10 points higher from here. So upper target on this BLU on SPY, like we said today, about 441 right top of the bull zone is that DD band today. And by the way, if you guys want to see on the test server, DD bands are a go. I've approved them. There's just a few more things to go. So the automated DD bands are skinnable. I'll give you guys a quickie little tour of that. Make sure it does it. It's probably gonna give me a log out screen here. It says logging you out. Yep. Good deal. Okay. All right. Let's see if I have it here. Test server. Hold on, let me put it on here. Okay, let's put in. Let me show you guys the new features. These are going to probably be launched tonight. They were supposed to be launched last night, but there was a storm and his connection was bad. We couldn't finish everything. Let's see if we get our, hold on, let me double check this. Wait, come on, load up. Okay, loading up. All right, I'll show some of the new features here. Even if you have indicators and things you want to build, we can even explore paying you for it, buying it from you, or you can volunteer to submit it. We can name it after you. We're gonna have this vendor marketplace where people are gonna be. We're building. Here's something cool we're building with Rocket Scooter. We're building a back-end coding console and our own scripting language called Rocket Script. Coding console will be a place for a developer like yourself. If you want to make indicators on our platform, you can pay for a license fee to be able to do so, and it'll start a subscription model here. All of our server processes, call them black boxes. They have black box or hedge pressure, right? It's calculated on the server. Data feeds come in, hedge pressure comes out, and prints on the chart. So just letting you know, today I'm looking for SPY to go to there. So calculations are done here. The console is going to basically be like a repo. You're going to take the code from here, bring it into the console, and then push it back to the black box, which will update the front end. You as a developer will be able to come in using Rocket Script coding language. So we're creating our own coding language right now, or we're planning it, and you'll go in there and script up, trading code based on candles and other things. Write your indicator, and then you can test it. So you'll have like some subcharts that you can test to see what it looks like when you're done. And once you like what it looks like, you can click deploy, and deploy will send your code to the server, and then all of a sudden it's live for people that subscribe to you. That's what we're building, Sydney. So essentially, you can put code on our servers to calculate proprietary indicators in the back end, and have people on the front end subscribe to those indicators, and you don't have to reveal how the secret sauce works. We already have that technology kicking out hedge pressures and liquidity maps and resilience and all that. So those of you that have indicator ideas will be able to go in and create your indicator, and then even sell it to people. People could subscribe to your indicator, $5 a month, $10 a month, and then your code is protected. That's the best part. So if you have an indicator idea, wait for that. We're starting to build that after the optimization project. So around September, October, we're going to transition into that and be building that. Yeah. You can pull indicators directly from TradingView. Well, TradingView's indicators are all done on the front end in JavaScript. I mean, I could open the console and steal the code from any TradingView indicator. There's no protection, any of that. So the front end part of TradingView is just like everything else. Thinkorswim the same way. I mean, you can't go in there like if you do control, like this is like what I say, a console. You want to give somebody an indicator, Thinkorswim, you have to hand the code to people, and the code is revealed to them. And so we're going to have like a console you can program in, but nobody sees the code, and it's all done on the server side. And you can deploy your indicators that way. So our technology is unique in that aspect. So our platform has that ability for vendors to create tools and share tools with each other, export them, share them, give them away for free, whatever. But your code is always protected, and only you have access to that console, and it's encrypted and password protected. Like even we wouldn't have access to it. We have to create a custom coding language so that you guys don't go inject random code into my servers. I just let you go in there and write in Python. You'll be hacking our shit in a minute. So we're gonna have a limited coding language that allows you to interact with data arrays and candles and limitations on what you can and can't do. But the security side, that's a big part of our business model going forward, is vendors can host their things on Rocket Scooter exclusively to protect their proprietary code. Probably nice. People like you can't go in there and jack it, because anybody can take anything from any of those places. So easy to do. Futures, if you were short, you just click sell market on the DOM. That's it. Sell and long. Profit map for finding opportunities to others. Someone who wants to play to 100 people. May sleepless nights thinking about payroll, etc. And people banking on company success. Appreciate you, Peter. I have only hired people. This one person I hired yesterday, I'm sorry, on Friday, was the first person I've ever hired who wasn't from Rocket Scooter. Every other person on our team has been a person in our community who we've hired. So we hire pretty much in-house, well, excluding our developers, of course. So pretty much everybody we've hired on our team is from the community. This is a person who's not a developer that is outside. So actually resumes and interviews and stuff. Yeah, I mean the Pine script on trading view. Yeah, you can, people that make indicators on Pine script, you have to hand the code out, right? Talking about the raw JSON for any chart. Oh yeah, okay. So basically you can see a chart and you're gonna rip the JSON that has like the coordinate values and all the stuff that shows how the display is on the chart. Yeah. Yeah, I get what you, I know exactly where you're going with this, Sydney. So like even the base indicators like this. Great trade. Hell yeah, you guys killed it. All right, DD Band, we're going. You'll see how this works. Who's first day in Rocket Scooter? Let me know if it's your first day. Pull long up to next resistance. I love it. I love it. I love it right there. Everything's looking great. Resilience is greater than 0. So clearly the upper part of the band, we call that mode 2 resilience is support, like I said earlier. Half gap. If we were inside the box, which are not, half gap is support. With DD being greater than half, bull zone is support. Look how easy this was today. Scalp, scalp, scalp on hedge break to there to DD bam. Easy peasy. All right, let's take a look at the announcement that came through. Let's see what we got here. I mean the news that came through. PMI. Let's look at the global service, U.S. services PMI. It's kind of more important one today. 51 on a 52 forecast. It's in decline, but below 50 is bad. So it's not better. It's still getting progressively worse. It did come in as a miss, but it's still above 50. So it's not terrible. The composite PMI real quick and manufacturing PMI. That's obviously contraction in the manufacturing sector of things. We know inflation's hurting that. Other things are happening, labor's hurting that. A couple of things, there's bottlenecks again, of course. Global composite, same thing. We'll pull back on those PMIs. Boo. Everybody keep a look today. It's very important. Remember VIX triple B. Anytime VIX is trading above the 1701, this is VIX futures, VX. Front month, September. Using Thinkorswim right now. Anytime this is above this, markets are going to be unusually volatile. We're going to overshoot pivots. It's going to be choppy trading. Anytime VIX is trading below 1701, the remainder of the trading month is going to be clean. I'm talking clean. You want a bull market to maintain trading below this triple B number. Just like that big bull month that we had right here. Once you're below it, you can decay for the rest of the month. VIX just gets hedged to oblivion. And we've seen that VIX has been in that decay pattern, even through that choppy period that we've had. We want to see VIX ultimately end up in decay to again support that second or third wave of bullishness. Now Nasdaq is breaking through DD band again to the upside. Let's go ahead and put Qs on the front and center. Looking nice and clean. New home sales coming in soon. Yeah, 1 minute on that. Oops. What happened here? And we're having memory issues on the browser side. I really can't wait to address that and kind of speed up the platform. One of the things, and that was my decision, you guys, was that at all the features we want to do, and the goal was to get to this stopping point here where we had futures, automated DD bands, and risk intervals and stuff. And as soon as that was done, then we would optimize. All right, so we're looking good on Qs. All right, let me try showing you some of the new features real quick. Okay. All right, first and foremost, here's the test server. Ready? He chose this really ugly blue for the default. Here's your automated DD bands right here in futures. Automated, perfect. Drawn exactly where we want to see it. Looking great. So already excited. So DD bands work. They work very well. It's the second day I've seen it. It looks good. So right now he's working on a couple things to make that the right color. We've created a watch list for you so that you come in and add some of your favorite symbols. Hit enter. So now you can effortlessly cycle through your different symbols. Looks like the ability for you to just do like a basic watch list, right? Oh. Again, we weren't trying to build more, like instead of a watch list that's gonna like tick price and things and have a lot of parameters you can put in the watch list, like percent change of the day, things like that. It would create more memory usage of the platform. So I told him, I said, just make like a favorites list so people can quickly thumb between their favorites. And then this will be our stopping point. So we call this a stopping point for optimization. Last thing's gonna be your risk interval. You'll have all your risk intervals printed here in the chart. Again, this is bare bones of it. But you have, so this is automated. We wrote a web scraper that goes to the CME site, rips all the data, and then runs the black box and then projects the calculation here. Risk intervals that are normally done Sunday nights, once a week. Now, again, risk intervals will change when margin requirements change. That's one of the tricks. Now, again, we don't do it every day because Emmanuel, one of our buddies, Charles, one of our members, has volunteered to do this risk interval thing. He's been doing it for over a year. Probably almost 2, kick ass. Updating those for you guys every single Sunday. So I'm sure he's excited to finally see this this process automated. So now every single night we're gonna update the risk interval. You need to check this on a daily basis. So this will be here, which is gonna feed into a couple other calculations, red lines, catalysts, things like that. So risk interval, favorites list, and then the DD bands. And then a few alerts will come with it, DD band breaks and things like that. And then pretty much that's it. Oh, and then VIX risk interval. So which is something that you'll have to deal with is another thing. VIX is the next thing he needs to do because that comes from SIBO. So yeah, the web scraper. We wrote a pretty robust web scraper that gets all this data from CME website. So we're good from the publication. And then it updates the platform. So one more thing down, and then I'm excited to release that. So automated DD bands, we've been waiting for that for a while, which is super hot, super sexy. All right. Let's see, we got data. Let's go. Where's the data? New home sales, a slight beat for July, 714 on a 705. Even at these interest rates, sales are going up. Must be the maybe the prices are coming down. Curious to see how that all plays out. All right, man. What a great day today. All right. Oh, I have a few more messages here to catch up with. All right. Let's go. What we got here? What a nice, clean, easy day today. I like this. Nice, clean day. Loving it, loving it, loving it. Okay. DD band break on NASDAQ, DD band push on S&P. Like I said, I came on the podcast today and we were talking about how you can see that the bull side is stepping back in pretty strong. It's going to be a bullish month. Love that VIX goes into decay. I like what I see. This is really clean. I really like this, matter of fact. How are you guys liking the platform? Is your first day or first week here? Let me know and I'll feel free to walk you guys through some stuff. Yeah, so futures. Hey, PFX. Oh, by the way, hold on. Let me see really quick. Yeah, so futures, you have to set up a futures connection with EdgeClear. Essentially, you park money into a futures account and you pay, you know, $1 a month for the top of book, and I think it's $13 a month for CME. You have to pay for futures data. That's the one thing we can't supply to you. And then that's it, and that should fund your futures data. And plus, you have a futures account, you can trade with it as well. Sydney says, Chase Management been trying to carry more drawdown than usual since we're about BBB. Yeah, it's like trade smaller and allow yourself to lose a little bit more on a smaller position. So overall, smaller position, bigger swings is the same loss as a bigger position, smaller swings. So above triple D, I always try to trade somewhat smaller and allow myself to maneuver into a position more than anything. Okay, so bull side strengthening, bear side weakening. This is clearly bull side up for SPY. It's looking great. Let's even see if IWM should a little better. And like IWM is complete trash right now. Like look at this, it's dog shit. There is no bull zone. There's no bear zone. IWM is extremely volatile right now. So it really just shows that we're still going to be riding on these, you know, mega cap tech stocks and things. And then small caps are going to get no love. There's no breadth in the market. So don't trust this as being super bullish for the long haul. A very bullish. This is just an inflation play. People are investing in equities because it's better than inflation. You know, the yields aren't high enough on treasuries that your take home isn't enough for people to really go all in on bonds yet. So, you know, stocks left some upside. As long as shorts are covering, stocks and market's not going to crash out yet. Commitment of traders is showing that as well. So, I mean, I still think that the market, you know, it's going to have to fight its way higher. I don't think we're collapsing yet, but I do think over time we're not going to be very, very bullish just yet. Until things stabilize, it's just going to be like a slow grow. And then next year, we're going to pop and keep going. We got to get through some of the sluggishness. And the real problem in the market right now is inflation and QT. People are talking about all kind of stuff, bond markets, this and that, treasury curve and yield, treasury yields inverted. Listen to none of that. The real slowdown of the market is QT, and nobody knows how that's going to behave. It's the first time many of us have experienced quantitative tightening in our careers. That's a big part. The Fed was a very large liquidity provider, to the market. They were keeping things up. They were buying all kind of things. And QT is just a general contraction. It's less throughput in the market. It's an engineering problem. In minus out equals accumulation. Well, there's less in, so there's less accumulation, right? So that's a big part. And then, of course, high interest rates is going to slow down credit. And people are like screaming, there's a credit event, credit's going to collapse. Those people are fucking morons. Okay, markets don't just collapse when interest rates are high. They slow down. These little newsletter sellers out there are like trying to, pick your side, super bull, super bear, whatever. They're being very like sky is falling, and you can tell they haven't traded a day in their life. For markets to collapse, a bubble needs to pop. You need massive defaults and things like that. You need, essentially mortgage bonds being rated shit for the mortgage crisis to happen, and that bubble had to inflate before it popped. Then we have, the U.S. loses its AAA rating with Fitch, but it's Fitch. It's like one agency, and it's like, yeah, it could be a thing, but is it a bigger problem? Yeah, maybe it is. But is that bigger problem happening now? Well, the mortgage crisis took many years to build up and then many years to collapse. Any kind of credit slowdown that ultimately ends up in bankruptcies or failures or even bigger bank failures will take years to play out. I'm a trader. I've seen it happen. Bears are acting like, yep, there's the downgrade. Market's collapsing from here, and you just understand who's never traded a day before in their life. Markets move on supply and demand only. They give two shits about what's going on in fundamentals. As long as people want to buy, market's going to go up. And why do people want to buy? They have other reasons besides fundamentals. As of right now, as a matter of fact, keeping your money in cash is like putting a flame to it, and it's burning up. Inflation rate is high. Cash loses money. You can't sit in cash. Treasury yields are slightly better, but still not great. And the stock market's up for the year. It's actually up for the last 3 years. So in a fund manager perspective, people are still holding long. They want to be long because it's the best place to put your money. It's the least loss of all the scenarios. And fund managers have been longing since October of last year. This green line is becoming more and more and more and more long, and just a little bit of profit taking has taken place. And now where we're squeezing at this point here, the big short position that's been wound up, which is the asset manager, is the green, the hedge fund is the blue. The blue itself has been starting to cover and squeeze. So as early as July, shorts are covering, meaning that people that were shorting on QT and shorting on rate hikes that have been squeezed, they're finally getting their Hail Mary to say, oh, thank God I can get out. You can see that ever since we started selling on these red candles, shorts started covering immediately. Blue is going up. So shorts are covering. As long as there are willing buyers, doesn't matter if asset managers are selling, markets become liquid. And this blue and green point to each other, point away from each other, markets are liquid. In this scenario, blue and green are pointing towards each other. Sellers are being met with buyers. People selling for profit on the long side are being met by shorts who have been short down here and covering at a loss. That liquidity is slamming volatility down and balancing the market out, which is showing why the VIX in the last 5 or 6 months has been in perpetual decay. There's no volatility here. Volatility will come with periods of illiquidity when they're both slanting in the same direction, particularly down. When they're both slanting down, the blue and green, the market pulls back. There has not been a period where they're both slanting down at the same time. You have selling and covering. And then again, this is just kind of noise and flat, but as you see right now, you have a general upward push and a general upward push with a little bit of pullback. The market has completely parabolically squeezed to the upside. Matter of fact, you can see that right here. So if I were to just draw a line from here to here, shorts covering, longs buying is the reason why this is self-catalyzing as a parabolic lift to it. Everybody's buying in this overall year. Now, again, this could be a change in sentiment, but we use monthly maps to identify the length of that sentiment. You can see right here, bulls are hanging in and bears are covering still. So this market is still resilient enough to do this. It's going to start picking up some momentum unless another bad catalyst comes out. Now, again, the market will have to pivot and work its way lower over time. It's not volatile enough. The market's not thin enough for this to happen. There's such a large wound up short that people just are hanging on for dear life, hoping the market collapses. And you really need a bubble to crash the market. I'm going to tell you this, that this is not a bubble right now. Stocks trade infinity times over earnings sometimes with no rhyme or reason. Don't try to assess the extent of what I call bull stupidity. If people are willing to buy, if it's better than losing your money due to inflation, and people are going to buy stock market even at highs, doesn't care. The fund manager's looking quarters out, years out, who knows? They're not thinking about QT and rate hikes in the short term. In general, you're going to be looking for defaults, basically like large defaults in the credit markets drying up because people can't pay back their loans. You're looking for unemployment to start going up, meaning that the credit rating or the credit risk model changes to loan out less money. You're looking for things like that to really indicate the market in general is slowing down and turning around. We've been going on hiring sprees. The market is not really in a state of decline yet. GDP quarter-over-quarter growth is still positive. It's still slightly okay. We're improving a little bit. It's not amazing, but it's good enough, right? So we're in a state in general that the market just is not going to collapse under its own weight. It could be sideways or choppy for years while we work through this mess. But with unemployment going up and GDP growth rate still positive, markets just don't collapse when the economy's doing better. Nobody's betting against it. Initial jobless claims. Continuing jobless claims. Let's look at durable goods orders as well. It's coming up. Initial jobless claims have been, not getting worse, not like getting COVID level worse, but floating around even 200,000, which is pretty norm for the last 2 or 3 years. It's a little elevated early on, in May. This is obviously, we're expecting this to start to kind of decay down, but we're getting a lot of people getting laid off and turned over. And again, that's probably because there are folks ready to go back to work at a lower salary because competition is now higher in the job market, and you can see that trend is here. These are former unemployed folks that are finally going back to work. The continuing claims are people that are continuing to file unemployment are in decline in general. So overall, there's fewer people in a continual state of unemployment, which means you're firing people at their ridiculously high salary and putting somebody back in that will take a lower salary, which is great. That's great for the credit markets. People have more job stability, and that's good. Now again, people making less money means that they can not borrow as much and may not be as reluctant to spend things, but it's not necessarily changing the risk model. Credit's still available there. And how do we know credit's still available? At least on home loans, we saw this morning, the home loans or the new sales and housing is going up as well. Building permits are going up. Where's housing? New home sales are up, meaning that there are people that can still get a house. These ridiculous interest rates. And they've been going up since October of 2022. Can believe it or not, people are going to go pay 7% on a house. God bless them. Right? But new home sales, people are still buying expensive houses because they still have all those inflated salaries. And the problem can come from the idea that people are getting laid off at a higher salary, getting hired back, lower salary employees are getting lower, coming back. So maybe some people might be trapped in their houses. It'd be hard to say, but people are still willing to buy. Nobody would be that eager to buy a house at that expensive if they didn't feel like they have an insane amount of job security. Durable goods orders, positive as well. That's today. So, in general, economic data is great. It's not great. It's good. It's not terrible. It's not showing imminent signs of collapse. It's showing some building problems. Yes, slowdown. People are getting laid off. There's still inflation. There's all these problems. But until you start to see slowdown or defaults or risk of credit drying up, you're not going to really see. You're going to see people betting on the bad side, but they're going to get squeezed faster than bulls are. Equities are still a safe play, according to many of these fund managers, because clearly nobody wants to miss out on the tech bubble. And people that are saying we're in a bubble, it's going to pop. The bubble just started inflating. The tech bubble will take the S&P to 6,000 to 8,000 at some point in our lifetime. It's not even begun. It's like a balloon that you just barely blew up a little bit. It's not at that stupidity level where markets are just trading ridiculously high with no stopping point every day. It's just like rally. And you're like, what is this dumb market that's going to end? That's how it usually ends. Right now, it's just like retracing highs, And so we're not at a period of like peak stupidity yet. We're at a period of middle of it all. So I think that and now again, the positional data is going to show everything. I still think that we end up supporting here at this low in September. We roll through October, November, December. It could get a little worse. So we'll have to see how the year plays out. And then of course, we'll take it quarter by quarter as we're looking at the options, and we'll see if there's any kind of stability here going forward. I'm still in the boat that we hit S&P 6,000 before we hit S&P 3,500, but that's just me. I think that the Fed is not going to let the market collapse. I think they will start cutting rates before they do anything else to preserve their ability to provide monetary policy of quantitative tightening. They're not going to let the market crash and collapse on itself, because if it does, they have to bail us out and go back to QE, and the Fed does not want to do that. So the Fed would rather cut interest rates and go to QE. So again, if the market gets really gross, the Fed will just start cutting rates to stimulate things. All right, so I'm liking what I see. S&P is up near its upper DD band. God, I love just seeing this. Like, I know this is a weird blue color, but I love just seeing this on the chart. Now, I don't know if it's drawn to, at least it's on there. It's not drawn all the way to the end of the day. I have to make a note of that. But it's great. It's great just to see this referencing here. It's been a dream of mine to finally automate all of this. So we're excited. Would you please check out the walls on SPY? Hold on. Because the way this works is not, you see at 442. But from up here, it's all calls. How do you interpret this? So let me explain. What do you mean? So liquidity map risk is not just today's options. These are all options that exist. And it's not just calls. They're not just looking at open interest. This is not even what that equation is looking at. It's actually looking at risk. There's a whole thing for it. Bull zone is bull risk. And it's not just meaning that there's an abundance of bull open interest. There's other things that go into the equation for walls. That's your question, City. Yeah, Simon, you nailed it, buddy. You completely nailed it. Perhaps there's a resilience threshold which would predict how long it will take to leave that area and whether or not it gets to or rejects. The resilience threshold has only resilience only is used inside of the redistribution zone box. Resilience is not a trending indicator. It's not designed to do that. Resilience is designed to show the market cap flux through the redistribution zone. The sum of RDZ flux of N of like all the stocks. So essentially, is there market cap fluxing through here? It's the, not really, it's not the equation itself, but it's just shorthand, the flux. Right? If Apple is trading through its half gap, the implied move is going to move from here to there. And all we care about is this box. So resilience being, 50, 60, if it goes to 70, goes to 80, goes to 90, it has nothing to do with price. Resilience can be going up and price can be going down. Doesn't matter. Resilience and price aren't connected. Resilience and price are connected inside of the box with sensitivity close to the middle of the range and less sensitive farther away, and then not sensitive when you're above. No, resilience has no weight as strength and bounce. Resilience is a discrepancy between SPY's current value and SPY's implied value, on the assumption that if all the stocks are trading inside it, watch, let me explain to you how this works. You'll get it, watch. You'll get it, watch. You'll see it. Okay. Plus, I'm going to put a couple of these. Plus, etc. 500 stocks. Okay. So it's like you have all the stocks in the S&P. If Apple was trading right here, and now JP Morgan is trading right here. If I were to snap my fingers right now, and these following things were going to happen. A stock that's trading above or below is ignored. A stock that's trading in the middle is included. And every stock that's trading in the middle, the move was completed to one side of the box. This one would be a downside move there. This one would be an upside move there. And I added up all the implied moves inside of the box. And I just snap my fingers and all the gaps were to fill simultaneously. Then the S&P would have a new value when you base it on that market cap flux, based on its current value. If the new value is higher than the current value, then resilience is above zero. If the new value is below the current value, then the resilience is below zero. It means that if Apple is weighted 5 times as much as JP, then equal moves would mean that SPY should go up if they were both to fill their gap to those resistances at the open and close. So the idea is it's a flux just through this box. So with resilience getting stronger, what it does mean is that there's more stocks that have moved from here to here, from this side to that side. More stocks that have moved from here to there, with the strongest being here. If resilience keeps moving higher and higher, the market isn't just going to move up. It means another stock is now likely to fill its gap. The S&P will adjust a little bit, obviously slightly higher, but you'll see that they're not necessarily correlated all the time. Generally, resilience is trending slightly higher. More stocks are breaking up higher and filling their gaps to the upside, which each time one of them does that, the S&P catches up to it. So depending on if it's like heavy market cap, low market cap stock. If it's a low market cap stock, I move through here. The S&P might not barely know it. If it's something like Apple, if Apple were to move from here to here, then resilience would take a massive spike because Apple is a huge part of that. And the S&P may or may not move much because Apple's not. It just depends. So I'm losing my voice here. Well, I mean, that's all. Resilience is designed to be a flux indicator. It's designed to be an exact tiebreaker at the halfway point, the gap. Every single day, markets gap down or markets gap up. The halfway point is a very strong balance point of that decision market maker makes. So the way that you look at it as a trader is at that halfway point, you need to determine if the market's a gap and go or a gap and fade. And so resilience is the tiebreaker. Resilience being above zero just tells you that the majority of the market cap is on this side of the box. Therefore, the majority of stocks are going to be pressed to hedge to meet their open price or close price, whatever the top of the box is. Resilience being positive all day, then you can eliminate a huge part of this chart. Resilience is so great. It's my favorite tool. It's one of the best trading tools ever invented. I mean, resilience immediately being above zero has eliminated this from even being possible without an event. Like the market's supporting here all day. And that's resilience just being above zero just shows me that there's two ways to take approach. If you're inside the box, there's a flux from here to fill the gap on the S&P. If you're outside the box, then the box itself is also support, which you broke above it, fell to it, and supported at the box. Resilience never broke zero. This is textbook day one stuff. And so anybody trying to short today, your short ends right here, as long as resilience is greater than zero. All right, you see how it's pushing higher. And that's how that works. Well, it's a simple equation. Actually, sorry, the equation's not simple, but it's a simple concept. The idea, well, I guess to me, the idea is that the S&P has two forms. It trades on its own with its own supply and demand, but also is tethered to the correct market cap weight some of the stocks, their values. And so if all the stocks were sitting exactly at half cap, okay, and going nowhere, then resilience effectively would be 0 divided by 0. We just make it 0 because the implied move is maximum on both sides. So we force that to 0. If all the stocks are in the middle, we force the equation to 0. If one of the stocks moves slightly higher, there's a huge implied move. Resilience is designed to move really quickly when one stock moves off. So it's like, imagine 50 stock or 500 stocks balanced and one of them starts to move. Resilience picks up very quick. There's a sensitivity transform inside of here that has resilience being sensitive in the middle. So if you turn your head to your side, the sensitivity looks like this, with the axis being 0 right here. So essentially, right here, when stocks are bouncing around right here, resilience is very violent. When stocks are bouncing around the same amount here, resilience just barely even cares. So the idea that a stock is moving above its halfway point is enough to give resilience a boost. So the sensitivity at the half gap is what makes it very responsive there. And that sensitivity model is that transform is the secret to the success of resilience. It predicts the gap fill almost every time. It's never wrong. Don't give me too much credit for it. Compared to the shit we did in engineering school, stock market's easy. The other day, the price was testing bottom of the bull zone. Yeah, man, appreciate you, bud. Now, again, you can adjust the sensitivity of resilience to be sensitive in different places to have a similar approach. An example is monthly hedge pressure resilience. It has to do with the flux above or below monthly hedge pressure. If I do this right here, you can see that monthly hedge pressure resilience is way off the charts. It's sensitive here now. So the yellow line has a sensitivity that's adjusted for here. Like, you can see that while the stock market is going up, monthly resilience is barely even changing at all. It's not even, it's just literally sitting pretty still. When you get to here, and when stocks are breaking through monthly hedge pressure, then monthly hedge pressure resilience starts to move very rapidly. The majority of stocks are really high above monthly hedge. So you're not seeing any interactions. So it's just saying that the majority of market cap is somewhere above monthly hedge, right? So you can, if you have an idea that you want to test like a tiebreaker of something, you're taking something that tracks a basket of other things and looking for arbitrage between the two. You're trying to find that basket, and you can prove that a basket is going to move somewhere by some mechanism. Then you can guess what the index value should be if those moves are all to take place. So an example is you can make a model like that that says, okay, if in an illiquidity pocket, we typically trade up to bear zone if we're above the halfway point. There's another way you can apply a resilience type formula to say, aha, the majority of, we look at all the illiquidity pockets and stocks that are in there, the majority of them are on the upper band. Okay, so the SPY can move up a little bit higher. You can create, and the way that you understand that is through either observation that those moves happen, or knowing that something like, for instance, redistribution in the middle of the gap is a huge buffer of buyers and sellers. The reason you close at one place and open at a different place is because you have a buy and sell imbalance. There's volume that will appear at the open and close, so you know there's buyers and sellers there. It's guaranteed. So because of that, half gap is a perfect flux point for like markets to go one way or the other, because it is that balancing act that can stimulate a balanced halfway point between buyers and sellers. If you're moving slightly higher, then it's proof that the buyers have overwhelmed the sellers. So if you find a place like that where you know markets tend to move more often, you can create a resilience type thing out of that. Yeah, so let's look at this right now. Stocks trading in the redistribution zone. Let's go ahead and go to the scanner. Good question. We can go, let's just clean it out. You can go. You can look for stocks that have broken above their half cap that open below. You can look for stocks that have opened above their half cap and broken down. You can look for stocks above half cap or below half cap. So these are ones that are just generally above half cap. And let's find ones that have broken to the upside. Okay. So now I can do distance from half cap. I can sort by the ones that are closest. United Airlines. And you can see that United Airlines just now broke through half cap and is now moving to the upside. You see that? So looking for stocks that have broken up, half cap break up, and that are currently greater than half cap. And then I'm finding ones that are right on that edge. Halliburton. See that? Pretty cool, Jeff. You like that? Room to move. DocuSign. Now, I would eliminate DocuSign. It looks like it's already done some move. This is one, but again, it's still right there. Pretty cool, right? Yeah, I know. I love it. So you can just sit here and pick out some ones that haven't. It'd be cool if we had like prices less than close, prices greater than open as well. Then you can really pinpoint just that little bit of a range there. American Airlines in that same boat as well. Yeah, this is a strategy for people to find, you know, if they want to find stocks that they just want to think that will trail the index. The index is positive. Let's find some lagging stocks that will eventually catch up, right? Pretty cool. All right. Oh, the scanner. You can do so many things with it. So as you see, this is a percent distance from half gap, 0.2%, 0.3%. A lot of them have already moved, right? But you can still find ones that haven't moved yet, like United is like right there, and then etc. So closest one, you can find something, and you can do the same thing for a lot of the other features as well. Like if you want to look for like stocks that have broken through monthly hedge pressure, probably not a lot of those. Yeah. Maybe hedge pressure breakup. Let's find some of those. Find some that have distance of hedge pressure. Which ones are right on the edge? Transocean, rig. Rig is just breaking through hedge pressure now. AP, FANG, USO, etc. Snap, TSM. So like finding hedge pressure breakups when all things are looking, you know, beautiful and positive to find runners is another trick as well. Even to make it even better, you can find hedge pressure breaks are in an illiquidity pocket to gain even more momentum. Illiquidity pockets tend to run really fast. So you see how this one's running really fast? I know this is the penny stock, but still, illiquidity pockets do run very quick. So, a bunch of cool ways to do this. All right, you guys. S&P trading right up at DD bands right now. God, that's so cool looking. Although I need to get a green color on this, but still, it's right there. I do love it. Right on the edge, and market's looking great. A DD band is probably the extent of what I look for today for a run. But then again, you know, market's looking great. Hopefully we get a bull run out of this. Maybe the market can turn bullish again for the month, defying all the bears where it turns its head down and gets ugly again. But either case, love you guys. We'll see y'all tomorrow. I'm going to call it a day. Make sure you go to the Rocket Scooter Discord. Send us a message. We'd love to have you. Check it out. $35 a month to try the platform. And trust me when I say you won't be disappointed. We do a revolutionary style of analysis. There's a reason we're going like wildfire. People understand the power of staring at positions in the market. Tell all. Positions tell all. Indicators tell the past. And positions look in the future. That's why we did this. We're always creating new tools. We're creating new features as we grow. The more people that grow, us, the bigger we grow and the more stuff we make. So appreciate you supporting the drive. ambition, this awesome team here. Appreciate you coming to the stream every morning and trading with us. You're our best friends in the world. So if you need a link to that extended trial, it's down below in the description. Click it. You can sign up $35 a month for 3 months. To try it out, it's normally $200 a month. So that extended trial gets you in to check out everything that we have. We love y'all, and we'll see y'all later. Have a good day.